are you predicating your new bull market hypothesis on essentially observations from market data, or do the fundamental economic patterns also suggest that we may have turned the corner when you look at the various economic matrices which are coming out now?
Yes, I find in general, specifically only looking at economic data is not that helpful in trying to time tops or bottoms. The trouble is the economic data looks so good at the top of markets and it looks so poor at the bottom of markets. But I like to use technical data and then valuation data. As I was saying, that's one of the key things I look at, and the availability of opportunities. I find that there are a lot of attractive opportunities in the stock market at the moment. On the other hand, if we do, on the other hand, just look at economic data, one of the things that we're starting to see is the first signs that the economic data is not as negative as it was in the early months of this year or the end of last year. So some of the PMI surveys and some of the early indicators, the forward indicators, economic indicators, are improving.
Skeptics to your hypothesis would point out that maybe in the second half of the year the economic fundamentals start worsening once again, and that will stop this rally on its tracks. Obviously you disagree with that.
That is a possibility, but that's not my central view. As I say, I think that the data is slowly improving. I'm not looking for a fast economic upturn, but a slow, steady improvement.
Has the risk of accidents waned in the US economy, Mr. Bolton? Because that's something which keeps worrying a lot of people, that some other Lehman kind of an episode or AIG will pop up and that will dent sentiment once again, because it's in the rebuild it must be quite fragile. In that, do you worry about things like GM bankruptcy or any other accident from the financial sector which might suddenly blow up in the face of a market which is rebuilding?
I think one worries about everything, and I can't rule out the possibility of new events, but I think the culmination of events that happened, particularly in the last quarter of last year, was exceptional, and I think that investors, there's an element of people getting used to negative news. So I think if we get some bad news on the car industry or whatever it is, I think people now expect that. It's not going to come as such a huge surprise as it might have been last year.
Okay, let's just go deeper into your own theory now that we've started a bull market. If indeed we have, what kind of a trajectory would you expect it to follow? Would it be a fairly V-shaped kind of bounce from the lows that we saw in March, much bigger bounce than we've seen already?
Very difficult to say. I think, all I would go on the record is saying that I think that a new bull market has started that I think will last several years. The exact trajectory is very difficult. The only thing that I do feel is likely, I think at some stage, I think there will be a panic amongst the cash that is on the sidelines to get reinvested. I think that phase is sometime this year, but exactly when it is very difficult to say.
You said that it's unlikely that the S&P goes back to retest 666 and it formed a bottom out there. Would you have a target for how much higher it could go in 2009 if indeed a bull market has started?
No, I wouldn't. I think it's enough just to say that we're in a new bull market, and I don't think that we will retest the lows.
Is it a bull market in your eyes across asset classes, equities and commodities? All of them have started again at the same time?
Yes, I think all risk assets, that it's a bull market, and I think the main message is probably to be out of government securities, which I think generally look less attractive, and into risk assets like equities, high-yield bonds, property, etc.
So you think things like crude, steel, etc. have also bottomed out along with the stock market?
I think they probably have. One of the things I believe is that commodities were very much at the heart of the last bull market, and normally what leads one bull market does not normally lead the next. So although I see a sort of a bounce in many of the commodity stocks and commodity areas, I don't think they're going to be the leaders of this bull market.
There has also been a view that next time around when we have a global equity bull market, in your views, which has started already, but it is not the US which will lead it, but other markets like emerging markets might outperform in a much bigger way. Do you agree with that, or do you think the US will have to lead any resumption of a bull run?
I think most markets have turned together, but I do think that the US in one sense will lead in that the crisis started there, and I think the fixing of the crisis is also there. So I think the US will need to participate in it, but I think most markets have bottomed together.
Finally, what's the biggest risk as you see it to your hypothesis that the bear market is over and a bull market has started again?
I think the biggest risk would be a completely new factor coming out, something, that came, if we saw bird flu or something like that develop, that something that no one is talking about today. That's the type of thing that would change my view.
So short of an element of surprise, you think the bear market is over?
I do.
Would it have been fairly short, going by historical precedent, which you were alluding to, that a bear market of such savage proportions just got over in a year and a half?
No, that's quite long relative to bear markets in the past, and that's one of my points, that relative to the average bear market, both in length and the extent of the fall, we're pretty mature by historical standards.
Anthony Bolton, thanks very much. Hope you're right. Very much hope that you're right. Thanks very much for stopping by today. That's the President of Investments.
Thank you.
Thanks. That's the President of Investments at Fidelity.